All right, I'm back, y'all. I'm back. I'm back, ladies and gentlemen. This is part two. I had to end the live because I had a bunch of lame ass people in my live stream. They was just leeching. They wasn't, I'm teaching and I'm teaching and they couldn't do nothing. They couldn't even hit the follow button, y'all. So, I got a little upset. I went and did it in my Discord. Like, I'm not about to be on here just giving my blood, sweat, and tears to people who wouldn't even hit the follow button for me, right? So I'm back. Uh, I'm back. I know that. I know after a certain time, my night shift people they come in and they show out. So I'd rather come in and deal with the people who are my night owls, right? All the night owls that come to my show, they always come in and they show love. So I want to. That's who I'm. I'm here for my supporters. I'm not here for the leechers. I'm not here for the people that's uh, not appreciative. So thank you, T. I appreciate that. Thank you. All right. So I was talking about how um, I was teaching people the difference between realized losses and unrealized losses, right? So I think I'm gonna go back just a little bit and start from maybe a slide back. All right. So here is where most people make the mistake that destroys their account. And I've seen this happen over and over again. It happened to a lot of beginners. That's why I usually try to come on here and do my best. Not try to, I do. I come on here and I do my best to help as many people as possible because I don't want it to happen to y'all. Now, it happens to people who've been trading for years too. Some of them never get this lesson. And it's called hope trading. Okay? I don't want y'all to be hope trading, right? You buy a $2,000 options contract and it's down $300, right? Let's say you got 2,000 wrapped up into this trade and it's down $300 and you telling yourself it'll go back, I ain't tripping. Next thing you know, it's down $600. And you like, I already held it this long, I'm just gonna wait till it go back. And now it's down $1,000, then 1,200, then 1,500, and then your contracts expire worthless. That's $2,000 gone down the drain. So that $300 loss that felt too painful to take became a $2,000 loss. Do y'all get what I'm saying? This is called hope trading. I don't want this to be you, right? Again, you buy into a trade. Let's say you spend $2,000 on a few contracts and the trade goes against you. You are now down $300 at this point. Now, if you were smart, you got a decision to make. You could take that $300 loss now, or you can hold it and hope that it comes back. That is a hope trap. I don't want that to ever be you. So the person that say to themselves, it's only down $300, it'll come back. It always come back. They hold. Now it go down more. They lied to themselves and then it go down more. Okay. So now they down $600 and they didn't have to be. So the voice in their head say, all right, I already lost 300 and I held it. So if I sell now, I'm losing $600. So I'm just gonna wait. It'll go back. They hold that shit again. Now it's down 1,000, 1,200, $1,500, and then it expired worthless. All right, so that $300 loss that felt too painful to take became a $2,000 loss because they could not accept a small loss. Right? Again, I'm your host, Coach Price. This is for educational purposes only. This is not financial advice. Y'all, thank you for coming on in. I appreciate it. Hit that follow button if you're new here. But again, that is the number one account killer in trading, bar none. It's the number one way that people fuck their money up when it comes to trading. Now, imagine that you have a small crack in your windshield of your car and you ignore it because you don't want to pay $150 to fix it right now, right? And then 3 weeks later, that crack has spread all the way across the windshield. And now you got to replace the whole thing for $800. So you tried to avoid the small pain and ended up with a much bigger pain. Trading is the exact same way. What up, Swan? See, I knew I had to come on a little bit later for my real people to come on in. Y'all hit that follow button if you new here. All right, the ones you see here, they grew here. Hit the follow button. So I'm gonna talk about why this happens. The psychology behind it. Okay. So it is not about intelligence. It ain't about how smart you are. It's not about intelligence. See, smart people do this every single day. This is about psychology. This is about psychology. As a human being, we are wired to avoid pain, y'all. We trying to avoid the pain. Selling a losing trade feels like you are admitting to failure. Excuse me. It feels like you are accepting that you were wrong. And nobody likes to feel wrong. That's the problem. Been missing you, fam. Always rocking with you. No doubt, Swan. I'll start coming back. I'm back, man. I'm back. Inbox me, I'll tell you about it. But yeah, nobody like to feel wrong. But here's the truth about the best traders in the world, y'all. They wrong all the damn time. They ain't right all the time. The difference is when they wrong, they get out fast. When they in a losing trade, they getting out fast. They gonna take a small loss and they gonna move on. They do not attach their ego to a trade. On the last episode, I was telling people about we was all in this example trade. Let's say we all got in the trade together and it went up the right direction. And so now you up $80 and you like, okay, I want to see it get to 100. Greed. But let's say you like, oh, I want to see it get to 100. It go down to $70 of a profit. And you like, damn, it was just that $80. I'm going to let it get back to 80. Now it's down to $50 profit because you didn't take profit when it was at $80 profit. Now you like, I'm just gonna wait for it to get back to $80 profit and they go down to $25. Do you think you get out then? No. You stay in the trade till it get down to $0 and you like, I was just up $80, so I'm gonna wait. Now you in the negative because you didn't take profit or break even. And I tell y'all all the time, a trade should either be a big win, a small win, a break even, or a small loss. A big loss is not an option. In fact, there is a famous saying in trading circles, cut your losses short and you let your winners run. You're going to minimize your losses and maximize your winners. Cut your losses short and let your winners run. That is the entire game, y'all. You take a whole lot of small losses very fast. All right, hey, it went the wrong way. I was wrong. I ain't losing my money. Hey, it went the wrong way. I'm going to get the fuck out the trade. Come here. Hey, you, come here. Get the fuck out the trade when it's going the wrong way. Get the fuck out of the trade when it is going the wrong way. Yes, I'm talking to you. When it is going the wrong way, just get out the trade before it gets worse, because that 1% loss can turn into a 5% loss. And when it's a 5% loss, you're going to be looking back like, damn, I really could have took a 1% loss. And then when it's a 5% loss, you like, it'll go back to 1, but it don't. It end up going to 20% loss. And you could have just cut it at 5. Do you get what I'm saying? And now what you want to do is hold on to your winning trades longer. See, over time, the wins is going to outweigh the losses, and you get to come out ahead by doing this. Think of it like a batting average. I know some of y'all don't know nothing about baseball. Let's say in baseball, a 300 batting average is considered excellent, right? This means that the player they getting a hit only 3 out of every 10 at bats. I mean, they throwing 10 every time the pitcher throw it at them. Out of 10 times, they hitting 3 times out of 10. But they are failing 7 out of 10 times. But they are still considered great. Do y'all know why? Because when they do hit, they hit it well. Trading is the same. You do not have to win every trade. You just got to make sure your wins are bigger than your losses. I'm going to give you another example. Let's say we flip a coin 10 times. Every time it land on heads, you make $3. Every time it land on tails, you lose $1. You landed on tails 7 times in a row. You lost $7. Whoop-de-doo. You landed on heads 3 times. You made $9. Even though you only won 3 times. You lost 7 times. You made more money than you lost. Put a W in the chat if you understand that. Both, Mr. Nice Guy. All right, so how do we fix this problem, y'all? How do we fix this problem? With the right guidance, D. With the right guidance, you can for sure. If you get into there gambling, not knowing what you're doing, you can lose more than that consistently too, if you don't know what you're doing. So how do we fix this problem, y'all? We make sure that we never let a small loss become a big loss. The answer is a stop loss. You don't say I'm probably not going to crash today. I won't bother with the seatbelt. You put that shit on every single time regardless. And the stop loss is your seatbelt on every trade. Never, I repeat, never risk more than 2% of your total account on a single trade. $5,000 account equals $100 at a time. That's all I can do. Small risk, controlled, protected. That means if I lose, I don't want to even lose the whole 100, but I can only lose 100 every time I take a trade. But out of that 100, if I'm down 20, I can get the fuck out and keep the 80 on just that one trade. Remember, I'm not deploying the 5,000 at one time. Some of us not even trading with a $5,000 account. Some of us growing a $500 account. Okay. And if you growing a $500 account, you shouldn't be taking trades that's taking up $200-300 of your money every day. You gambling. And if you are, you should have a very tight ass seatbelt. That seatbelt need to be on for sure. For sure. A stop loss is an order you place that says if this trade goes the wrong way, get me the fuck out. If this trade goes against me by this amount, right? All right, I put $100 into this trade, but if it goes against me to where I'm down $20, get me out. Automatically close the trade. I don't want my feelings to be involved. I ain't got to deal with hoping. I ain't got to hesitate. Just close it. Again, this is your seatbelt. When you get in the car, you do not say, I'm not going to crash, so I'm not going to put it on. You got to put this shit on regardless. Some of y'all do. Some of y'all trade the same way you drive too. Reckless as hell. No pun intended. Now, how do you set a stop loss? I already told y'all that 2% rule. And if you need help, like outside of this live stream, inbox me right now. Your name and your number and the best time to call you. I'll get up with you. Okay? Again, if your account is 5,000, you should not be risking more than $100 on any single trade. That sounds small, and it is small, but that is the point. Small, controllable losses, not big account destroying losses that y'all be taking. Mr. Nice Guy says, so as long as you got more wins than L's, you will be okay. Nah, Mr. Nice Guy, that's not the point. No, that's actually the opposite, Mr. Nice Guy. As long as your losses are small, it don't matter. You can have more losses than you do wins. As long as your losses are small, then you come out on top. Because your wins have to weigh more than your losses. You can lose 7 times out of 10. As long as those 3 times that you won are paying you more than every time you lost. You can only lose 1%, 2%. I'm not risking a lot. Why do you want to lose more than that anyways? Now, the goal is to stay in the game long enough to get good. You can't improve if your account is blown up, right? You can't improve if your account is blown up. Protect the bag. Secure the security. Protecting the account is priority number 1. Isabel, I'm back. I had to double back for my people. I just wanted to get rid of all the leechers. You know what I'm saying? Every now and then, y'all, I go live. This live will be filled up with 800 people, and it'll say 3 new followers. And I'm like, hell no, they not about to just sit here. I can't get them to tap the screen. I can't get them to share or like or show support. So I don't support people who don't support me. No, this is not that. I'm here for y'all, for the people that support me. Now, we're going to flip this for a second. We're going to flip it because unrealized gains work for the same way, but in reverse. And people mess this shit up too. Let's say you buy a stock and it go up. Okay? You buy a stock and immediately it go up. You sitting on $1,000 gain. Yeah, I had to get Jared out of here though. Jared came inside the last live stream and he was trying to step on my toes, man. He was stepping on my toes. So he'll inbox you. Be careful, y'all. With anybody that inbox y'all, they scammers. They scammers, and I do not speak with them. I do not work with them. I do not know them. Okay, so be careful if they inbox you. If it ain't me, if you don't get on the phone with me, it's not me. So inbox me your name and your number and the best time to call so you can have my direct contact and you don't have to be dealing with other people like that. All right. But anyways, we're gonna flip it for a second. Let's say you buy the stock, it go up. Now you sitting on $1,000 gain. You done made $1,000 and it feel good, but it is unrealized. You do not actually have that band. You ain't made that grand until you sell. You see what I'm saying? People make the mistake of getting so excited they start screenshotting shit. They done got so excited about an unrealized gain that they hold it too long. Right? They hold it too long, and then the stock drop. It dropped back down, and then they give the gain back. They give back everything they just made. They end up where they started at, or worse, in a loss. How many times y'all been in a winning trade, it goes the right way, and you didn't get out fast enough, so now it goes back down to zero or worse, negative. Well, if you have a profit target, that wouldn't happen. Just like you need a stop loss to protect you against big losses, you also need a profit target so that you can lock in the gains. Yeah, bro, I'm just trying to learn all about this, and I'm on a fixed income. Okay, well, D, you good. You good. D, you in the right space. Do you feel like, D, if you just listen, you'll learn. I feel like I'm teaching. Tar Heel says I've done it, but in crypto, for sure. Matter of fact, D, here's a teaching moment for you. Just like you need a stop loss to protect you from big losses when you trading, you can set something called a stop loss, D, that'll protect you from losing your money. That's the important thing. You can also set something called a target, a profit target, that can make sure that you keep the money that you make. So hear me out. This is going to save you a lot of money. If you decide before you enter a trade, if this goes up this amount, I'm taking profit. You need to stick to the plan. Do not get greedy. See, locking in the real gain is always better than watching an unrealized gain disappear. All right? A gain on paper is not money in your pocket. You have to actually close the trade to make it real. Do y'all understand the words that are coming out of my mouth? All right. You got to close it to make it real. Now, I want to talk about something that I think is just as dangerous as holding a losing trade, and that is not buying when the prices are low, ladies and gentlemen. The stock market then gave y'all some very good prices over the past 2 weeks, and I think y'all been bullshitting. So I had this conversation so many times, right? The market dropped, people get scared, they move to cash, they sit on the sidelines and they wait, and then when the market started going back up, they jump back in at higher prices. They literally buy high and sold low without realizing that's what they did. Huh? Here's an analogy. Your favorite sneakers cost $200. One day the store puts them on sale for $120, a 40% discount. You hurry up and buy them. Now imagine the stock market dropped 10 to 15%. Those same companies that you believed in last month, they are cheaper now. Instead of buying, people run away. Right? You believed in this company last month, but now that it's cheaper, you're going to go the other way. What the hell? A down market is a sell. The question is, are you brave enough to shop when things are scary? This is one of the most counterintuitive things about investing, y'all. When things look scary, that is often when the shit is the best. That's when the best prices exist. When everything look great and the market is at all-time highs, that is when the prices are the most expensive. That's when you really should be backing the fuck off or taking profit, right? So I'm gonna make this clear. I'm gonna make this very clear. I'm gonna make it real for for anybody in here who is not just a trader but also an investor. Okay? Someone who is building wealth over time, you are an investor. The S&P 500 fell about 4.6% this quarter. The NASDAQ fell over 7%. So for a long-term investor, somebody who is not planning to touch this money for 5 years, 10 years, 20 years, this is not a disaster. This is a discount. Every single recession in American history, every single major market crash eventually recovered, and they went to new all-time highs. Every single one. The Great Depression, the 2008 financial crisis, and COVID in 2020, all of them. The market recovered shortly after. Tar Heel says, so does the same rule apply in stocks? Buy when the market is red, sell when it is green? That's exactly when it happens, Tar Heel, unless you a long-term investor, right? That's someone who is not planning to touch the money for 5, 10, 20 years. Now, who remember in 2020, in March 2020, during COVID, when SPY dropped about 34% in just a few weeks, S&P 500 dropped about 34% in a few weeks. That was terrifying. You had people selling everything. They were selling everything in their portfolio. So the news was awful. We had unemployment was exploding. It felt like the world was really about to end during that time. I'm glad you can, Tar Heel. You supposed to hit me up, man. I forgot. I think I talked to you. You did call me last week. Yeah, call me back, man. Tomorrow. Get with me tomorrow. So a lot of people bought during that crash during COVID, y'all. A lot of people was buying during that crash. Even at the absolute worst moment, you had a lot of people that was smart enough to buy and just held on. So within 6 months, the market had recovered. And within a year, it was at all-time highs. The people who panicked and sold, they lost money. The people who bought during that fear made a lot of money. They made an extraordinary amount of money. All right, so I'm not just saying go dump your life savings into the stock market right now. No, that's not what I'm saying. I am not saying we are at the bottom. Nobody knows exactly where the bottom is. We don't know if this is as low as SPY could go or if it's done going low. But I am saying if you believe in the long-term future of American companies and the American economy, then a down market is not a reason to run. It's really a reason for you to pay attention. Yes, after one. That'll be a perfect time, Tar Heel. K. Murray, dollar cost averaging. That's right. So this is what the money is actually doing right now. Here's something I want you to think about. When you see the market go down, somebody is on the other side of that trade. Somebody is selling, but somebody is also on the other side buying. So who do you think is buying when the market drop, y'all? Who do you think is buying when the market drops? It is not usually the scared people sitting at home watching the news. It's the institutional money. Okay? It's the institutional money. What up, Stock Steppers? Hedge funds, pension funds, big banks, professional traders, millions of dollars, right? They are accumulating, they are building positions at lower prices. And then y'all, the retail investors, you and I, we panicking and selling. And then when the market recovers, who made the most money? Who made money? The people who bought low. Not the people who sold in fear and then tried to buy back in once the shit was high. Any real estate investors in here know what I'm talking about? Remember the housing market crashed in 2008? Regular people stayed away out of fear or lost their homes, and you had some wealthy investors who bought houses at rock bottom prices. 10 years later, even till this day, those investors have made fortunes. The same pattern plays out in the stock market over and over again. Over and over again. It's all in my head. Face ad. Not for real though. So I'm going to get specific about something I've been watching closely too. Energy. Because of the Iran war and the threat to the Strait of Hormuz, oil prices have been high and potentially going higher. So I want y'all to remember that Microsoft deal that I was talking about earlier, where they building a $7 billion natural gas plant with Chevron. That tells you something. See, the big money is not running away from energy. It is running towards it. Chevron is an energy company. When the oil prices go up, energy companies like Chevron generally make more money. They profits go up, and that can show up in their stock price. So this is what I mean when I say not every sector is going to move the same. Mr. Nice Guy says ExxonMobil has made money since last year. So when some things are going down, other things are going up. And right now, y'all, energy is one area that is seeing a significant amount of interest and investment. I'm not saying go buy Chevron right now. Do your research, right? You need to understand and understand what you're buying. But I am saying part of being a smart investor is understanding which sectors are positioned to benefit from the current events. And right now, energy is one of those things that I want to make sure y'all paying attention to. Let's talk about the other big thing that's driving the market. What you say, Sam? I ain't see your comment. Your comment didn't come through, Sam. Defense stocks. Yeah. Defense stocks too. But look, artificial intelligence, Mr. Nice Guy. AI is another theme that is driving the market right now. AI. Because this is not a short-term trend. This is not a bubble. This is a fundamental shift in how the world operates. We talked about OpenAI the last episode being valued at nearly $852 billion, y'all. We talked about Microsoft building a $7 billion power plant just to run data centers. Then we talked about how Intel was going up 7% yesterday. NVIDIA went up over 5%. The AI build out is real and it is happening. Companies spending hundreds of billions of dollars building infrastructure for AI right now. And that spending is flowing into chip makers, energy companies, data center companies, and cloud providers. Right? Now, the picks and shovels strategy. During the California gold rush, y'all know I talk about this a lot. During the California gold rush in the 1800s, most people was rushing out to find gold, didn't get rich. All right, imagine a time where everybody going outside looking for gold. Everybody wasn't getting rich, but the people who sold picks and shovels, jeans and supplies, gloves and shit to the gold miners, they made fortunes regardless of how much gold was found. All right, in an AI gold rush, you do not have to predict which AI company is going to win. You can invest in the companies that supply everyone. The chip makers who make the hardware, the energy companies that power the data centers, the companies that build the infrastructure. That is the picks and shovels. That is what I'm talking about. That's the picks and shovels play in AI. Mr. Nice Guy, of course. I'll make a post about him, but Palantir at the top of the list. Palantir is at the top of the list. All right. So let's bring everything together. We have covered a lot tonight. I want to make sure everybody in here leaves with clarity. And this is the big picture of where we are right now. We have a market that had a rough first quarter because of uncertainty. Okay, with the Iran war, with the tariffs, the oil prices, and the job growth actually slowing down, that type of uncertainty caused the S&P 500 to fall almost 5% in the quarter, and for March to be the worst month since September 2022. Today was a big red rebound. Not red rebound. We're gonna call it just a rebound because it was so green, but it bounced from a red moment. So today was a big rebound, a big green day. The market jumped nearly 3 to 4% across the board. But one good day does not erase a whole bad quarter. We need to watch whether this is a real recovery or just a bounce before more selling happens. Okay? What do y'all think? Are y'all bullish or bearish? Do y'all think that was just a bounce that we experienced yesterday and we have more selling to coming? More selling to coming. More selling on the way? What do y'all think? Either way it go, this is critical. Big companies are still investing a shit ton in the future. They are investing massively in the future. Microsoft, OpenAI, Nvidia, Chevron. The smart money is not sitting on the sidelines waiting for certainty. They are positioning for what is coming next, and that's what I want y'all to do too. So here are 5 things I need you to remember from tonight. If you just not coming in the live stream, you entering at the right time. I don't want y'all to do shit else but hit the follow button if you new here. If not, if you need my help outside the live stream, right? You need mentorship. You need somebody that's going to help you. Inbox me, your name and your number, and the best time to call. I got you. So number 1, the market moves on fear and greed. When there is fear, the prices drop. When there is greed or optimism, the prices rise. You have to learn to read what's going on, and you're going to overstand and understand why the market moves the way it do. That's number 1. Number 2, an unrealized loss is not real until you make it real. But do not use that as an excuse to hold on to a losing trade for a long time. You need to know your exit point before you even get in the trade. That is a rule. You need to know. But right then and there, you got to say, hey, if it get down to here, I was wrong and I'm going to get out. All right. Number 3, a small loss is a gift. A small loss is a gift. It is the market telling you that you was wrong on this trade. You need to accept it and learn from it and move on to the next opportunity. Okay? A small loss that turns into a big loss is always, and I repeat, always because somebody refused to accept the small loss. Put a W in the chat if you understand that before I go through the rest of them. Do y'all get that much? Because don't enter into a trade tomorrow acting like you ain't hear me sell you this shit today. All right, so number 4, down markets create opportunity. If you are a long-term investor, a market pullback is not a reason for you to panic. It is a sell. The question is, are you brave enough to shop when everything looks scary? All right, number 5. Always know why you are in a trade, y'all. If you cannot explain in 2 sentences why you bought something and when you plan to sell it, you are not trading, you are gambling, and we don't teach gambling here at Ironworth Trading. That ain't what I taught you to do. Now, here's what I want you to watch in the next coming weeks. Okay? Just pay attention. It's the best part of the show right here now. This is your market. These are your market signals right here. You pay attention for this to happen. I want you to watch oil prices closely. If oil starts to come down, y'all, that is a signal that the Iran situation may be de-escalating. That would be a positive thing for the broader market, okay? Watch the jobs data. If you're not watching the jobs data, you can. The next big jobs report will tell us whether hiring is continuing to slow or if it's stabilizing. And if it slows significantly more, then that's a warning sign for the economy. I also want y'all to watch the Federal Reserve and see what they say about interest rates. They are paying close attention to inflation right now. So if inflation keeps rising because of the oil prices, they may be forced to raise rates or keep them high longer, and that's not good for our stocks. Okay? And we also want to watch the technology sector. We want to pay attention to Nvidia, Microsoft, AMD. The whole AI build out story is the biggest economic story of our generation. We want to pay attention to that shit. Okay? Where the money flows in, wherever you see, whenever you paying attention to technology and where the money flow in at, it's going to tell you a lot about where the market confidence is going. Okay? Now listen, I want you to take a second. I'm going to be real with you. I want you to take a second and think about what I said. The reason I do these streams, okay, the reason I come on here and do these live streams, it ain't because y'all gonna hit the follow button. Y'all be acting weird as hell and not hitting the follow button. It's not because y'all gonna like the live enough. It ain't for the pennies that I make when y'all send me gifts and shit. You feel me? The reason I started Ironworth Trading is because nobody taught me this shit early. I had to learn it the hard way. Okay? I made the mistakes. I held losing trades too long. I panicked and sold at the wrong time. I sat on the sidelines during opportunities that could have changed my financial life. I do not want that for you. That is why I'm here for 4 hours talking to you. Because this information is valuable. The opportunities are available, but you got to educate yourself first. See, knowledge is not power. Applied knowledge is power. You got to have the power of execution. You got to understand and overstand the game before you can play it at a high level, right? So tonight we talked about what happened in the market. We broke down the Iran war and why it matters. We talked about jobs, consumer confidence, Microsoft, OpenAI, and most importantly, we talked about how to protect yourself from the number one account killer in trading. Now the information is in your hands. What you do with it is up to you. Lauren said, I don't think we are out of the woods yet. Sure, S&P was up, but oil kept running up too. Red flag. That's right. That's right. That's what I mean. Pay attention to oil now. So I thank y'all for spending hours with me tonight. I appreciate every single one of y'all. Get some rest. Protect your money. I'll see y'all on the next one. Again, if you need help, if you need mentorship, go ahead and give me a try. Inbox me your name and your number. This is a sign that it's time for you to go ahead and take this shit serious. It's time to take it serious. There's no better time than now. Especially if you don't have an investment account already, you're not already preparing for retirement, because, retirement has absolutely nothing to do with age. There's a number, okay? There's an amount that you need to never have to work again. How much do you need to never have to work again? How much money do you need to never have to work again right now? That is your independent retirement. That's your independent retirement number right there. You need that. 1.2, that's your financial, that's what you need. So it ain't a matter of time. You don't work a 9 to 5 to get that. No, 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 no. It'll take you too fucking long. You need compound interest on your side. It's called a financial independent number. That's how much you need to be financially independent. And it's okay. You don't need to be rich to get started, but you do have to get started to be rich. You don't got to be rich to get started, but you do have to get started to be rich. Y'all, the market will always be here tomorrow. Make sure your money is too. All right. We're going to make today twice as good as yesterday and half as good as tomorrow. Now, on the flip side of that, all right, I want to see who needs a extra source of income as far as a side hustle, or you would like to earn money on the side. Maybe you want to make some money while you at home or make some money on the go. I need you to inbox me your name and your number and the best time to call you. I got an opportunity for you to get licensed in your state. You can I'll teach you how to sell life insurance. We hiring on that end. So I'm hiring people who would like to learn how to sell life insurance this month. This is becoming an excellent opportunity to buy big tech, says Gabe, for sure. I'm also starting a club, like a campaign where I'm getting together everybody who is an architect of their family's legacy, and we making sure that everybody is set for generations to come. This is not just talking about generational wealth. This is actually building it, making sure that your family have a trust, that y'all open up a trust and do everything that you supposed to, and have it set up to where your stocks in there, your beneficiaries is updated, and everything is set up the way it's supposed to be set up. I'm also helping people open up their own business this month. If you have a business idea and you want to get it off the ground and you don't know where to start, inbox me. We're going to build you a business plan. I got you. I'm helping people write proposals. Okay? We doing a lot here at Ironworth Trading. We doing a lot here. We teaching people how to use AI to create side hustles as well. We have a class for that too. Gabe says he's adding to NVIDIA and AMD, Broadcom, and Amazon too. Yes. I'm liking Coinbase. I'm liking anything that's down from all-time highs. I just made a post about it. Not anything, but most of the high value things that were valuable last year are valuable now. Just because it's down don't mean it ain't valuable. So I will be adding to a lot of shit, Gabe, and been adding, and I ain't, and gonna keep adding. I dollar cost average on the way down and on the way up too. AMD, Palantir, Nvidia. Y'all watching it down as much as it's down now and not getting it is crazy. Only thing I'm not touching is Netflix. Yeah. I was looking at UNH. Something tells me that the health sector needs to be paid attention to. I think it's been very quiet. Very quiet. I'm watching HIMS, okay? HIMS. I'm watching UNH. I'm watching Novo Nordisk. I'm paying attention to these healthcare stocks and shit. Yeah, watch them. Because out of nowhere, they'll explode. Something will happen and they'll go up, but nobody's paying them any attention right now. I love when nobody's paying it attention. I like beating down stocks too. I believe that Palantir can be one of the biggest winners in the next 3 years, rate of return wise, says Gabe. Last year, we saw a lot of signs of that being possible, Gabe. But yeah, I appreciate y'all for being a part of the show. Maybe let's pull up, let's look at Spot real quick before I end the show. Let me see. Let's see, how can I do this? But first off, let me start by saying this. It's on Haikanashi. Let's take it off extended hours. And make the lines to where y'all can see them. RSI is sitting at 47, which means it could go higher. It's not even oversold nor overbought. It's actually below 50. So, anyways, we still in the downtrend. Hold on, y'all. Make sure y'all can hear me. Yep, there we go. Tara Wolf, for the purple line, are you using the MACD indicator? No, that purple line is an EMA. That is the 200 moving. That is the 200 exponential moving average that you're looking at. So we are under the 200 EMA. We might retest 661 next. This is the dynamic level of resistance to pay attention to. 661. I want to hear some music now, y'all. I'm about to get off. I want to get off the live. All right, let's see. I think, yeah, 660 next will move up. It's a lot of buying. It's a lot of volume up here at the 654 level. Okay, what indicator is the two red lines and the white line? These two red lines, these are not indicators. These are trend lines that I drew on here. This white line is support. This is the floor. This is the level that the price came down to. And the buyers stopped it from going lower than that. Okay. Let's see. Let me get some of these indicators off of here so you won't be confused. As of right now, the only indicators I got on here is the RSI at the bottom, which is the relative strength index, and I got the EMA, the exponential moving averages, which is these three lines that you see that's popping up on the chart. Those are showing you the average price of SPY over a certain period of time. Okay. Go watch one of my classes on EMAs. We were trading above them for a while. We just crossed below the 200 moving average, crossed below the short term, medium term, and the long term. So we've been short term bearish, medium term bearish, long term bearish. Just because this bounce happened does not mean shit. All right. And it still needs to get, let me see. I will show you extended hours though. We are breaking above that line. All right, so us breaking above that line, I want to see if we'll stay above this line, and if so, I'm bullish. Other than that, I do think it'll come back. It'll come back down to retest under 620. The next time it dropped, we'll see below 620. We'll create a new low because, as you can see, the price was making lower lows. See how it was low right here? It came down this low, and it went up. Created a lower high, came down, created a lower low, came up, created a lower high, lower low, lower high. So we will see. We will see. We'll see if this is the bottom. And if it's going to recover from here. Or if 628 was the bottom. SPY got all the way down to 629. So imagine a climb from 629 to 700. No, this is Webull, Gabe. Yeah, this is Webull. United States oil is at $127 right now. That's just too high. That is a red flag. If the market was going to be recovering, this shit would be coming back down by now. It didn't come down enough. It did drop down yesterday to 124, about $10 from 133 damn near, but nah, that's not enough. Nah, $6 in one day, that ain't enough. Because it went all the way up to 130 and then it dropped all the way down to 124. And we at 126 now. I think oil could go higher than this. It's above the 200. It's above all three moving. It just crossed below two moving averages. But still, I'm still bullish on oil, on USO. On the daily time frame, we still above all three. Let's look at the VIX. VIX is trading at 20, 25. Okay. Still high. There's still some fear in the market. It's coming down. It's calming down a bit. But I don't buy the hype. I don't buy the hype. We got to bounce on Google. We got to bounce on gold. Gold cross below the short-term moving average. SoFi or Wi-Fi. I mean, if you like SoFi, buy it. I don't got shit else to say. I was looking at it. I liked it at 17, so why wouldn't I like it at 16? Why wouldn't I like it at 15? You know? I liked it then. I like it now. It's not quite where I need it to be yet. However, this is a great level to get in if you do believe that it'll return to all-time highs or beyond. I'm not getting any more. You understand? I have a lot. I averaged my price back down in when it was 16. It dropped to 15. Yeah, I don't like it lower than 15. I don't like it lower than 15. It was $15 last year. It dropped last year. Let's be clear. Okay, around this time last year, it fell from it went from $12. It dropped from $12 to $8 this time last year. So don't be too afraid like I am. Don't listen to me. That's why I had to make sure I show you something real quick because I'm just not getting more. It can go back to $8 and I'm not gonna get more. But I'm showing you though that it did drop that low before from 16. Matter of fact, in 2025 of last year, because I had to take into account that this was all tariff shit too. It went from $18 all the way down to $8 just to go up to 32. Okay, and now we at 15. Just to put it in hindsight for you on SoFi. I like them as a company. I just had to open up an account with them because I like the product. I think they doing big things. A lot of new generations gonna use them. I don't know shit about white fiber, so I can't tell you nothing about this company other than that looks like half up a head and shoulders pattern. But yeah, I can't tell you nothing about this company. I know nothing about them. Except the all-time highs was $40.75. And right now it is $11.91. And it's made lower high, lower lows. It's in a downtrend. This is a new one that IPO to look like. All right, any other questions? Nvidia could be on its way back up too. Matter of fact, let's look at the next level. Right here. It's the next level. 170 to 184. Right now, Nvidia is at 174. It'll go up another $10 if it before it come back down. Hood. Let's see, hood. Hood is bouncing off that level of support. $65 is up to 69 right now. $70 is another level I think it'll go to. Of course it'll go there. If it go above $70, matter of fact, this is a great buying level because Robinhood was $153 a share just in October. Just in October. I have no doubt that it will return. I have no doubt that it'll return. Let me create an alert. Got a price alert. Pay attention to that shit. Oracle. Oracle was $344 a share in September. It is now $147 a share. I think it will return to all-time highs as well. Okay. Coinbase was $444 a share. It is now $174 a share. I think it will return to all-time highs as well. I mean, come on now. What y'all gonna do? Barbecue or mildew? Good evening. Good evening. Micron is 337. It was 471 just last month. EMAs, what's best practice? The 950 and the 200. The 9, the 50, and the 200, because the 9 is the short term, but you know I'm a swing trader though. So let's say if you a day trader, then you can use the 5 EMA, you know, because you on a short time frame. I would use the 5 EMA, maybe the 5, the 9, and the 25, or the 5, the 20, the 5, the 20, and the 50. It just depends on your preference, and it really do depends on what you like. But yeah, rule of thumb, you know, 950, 200. Look at Micron. And the after hours just climbing, just trucking. Yeah, this the 9, the 50, and the 200. You could fix it to where you could you could change those parameters. Yeah, you could change those parameters. Yeah, you can call me anytime, brother. You know I'll walk you through anything for life. Anytime. You got a lifetime membership with me. Call me anytime. Now, why is this company, Micron Technology, why is it climbing right now? Because we got a pre-market bounce after a rough stretch. See, MU and SanDisk. Y'all know who SanDisk is? Hold on. Boom. Have y'all ever seen a company climb like this before? Hold on, let me show y'all something. Have y'all ever seen a company climb like this before? I'm sure y'all have. $777. It was just $777 last week. And I want you to know that you could have bought this for $67 in September. I'm sorry, I ain't tell you. I ain't know my damn self that SanDisk was finna go from 67 to 777. We'd all be, y'all wouldn't even be talking to me right now. We wouldn't even be talking to each other. I wouldn't be on here right now if I knew that. So we try to pay attention to shit so we know we're gonna catch it when it do, when we go blah 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 blah. Is that a tank top or a new bra? But anyways, this bounce that we seeing on SanDisk, on Micron Technology, all right, this comes after MU got hit hard recently. So what you don't see is how hard they got hit. Hold on. See, look. See, they went from 471 and fell all the way down to $309. So that's this bounce that you seeing happening right now. They got some ways to go back on. They gonna go back. It's gonna retest. Hey, listen, swing traders. This shit going at least to 370 on some slick shit. At least back to 370. At least gonna retest one of these EMAs. Micron is a good company. So the core bull case is the earnings beat. Micron reported February quarter earnings that beat guidance by 45%, and May quarter earnings guidance doubled. It doubled. So that's what sent this stock to an all-time high of $471 on March 18th. Right? It was $471 on March 18th. Then the sell-off happened. We had Google's Turbo Quant AI compression technology renewed demand fears, driving the shares all the way down. So today's bounce that we looking at on MU, it looked like a relief rally. You feel me? A lot of people staying bullish despite this sell-off. I'm bullish on this company despite the sell-off. So I'm basically looking at memory pricing strength that could extend into 2027 that's going to push this shit back up. Bottom line, MU dropped hard from its all-times high on AI demand, on people being scared of some shit with AI. And today it's popping back up because the market buying that dip on we just buying the dip. Now, really the debate is whether Google's compression technology is a real structural threat or if it's just noise. Google is their competition. Google is their competition. Any questions? Why you sick, Tar Heel? Tar Heel, why you sick? I think silver is going to go back up over $100. I think everybody want to wait till it start popping to try to get in. Like, come on now. Like, what are we doing? What are we doing? Why would we want to wait for it to get back jumping before we do that? Because I bought that stock at 43 dollars a share years ago. What did you do? Sell it? You sold it, didn't you, Tar Heel? That's why you sick. I understand. I know the feeling, man. I understand the feeling. Xavier, thank you for joining the Discord. I just got a notification. Thank you for joining the community. Congratulations. You got access to me now. You can ask as many questions as you fucking want to. Hell fuck yeah. Damn, man. You shouldn't have sold it, brother. Which one? SanDisk? No, I don't blame you. Ain't nobody know that this shit was finna do this, man. Don't beat yourself up. Let me see when you bought it. Let me see when you bought SanDisk. Hold on. Could have been too long ago. I think they just IPO'd. MU. Ah, okay. MU. Yeah, MU been out for a while. They was $20 in 2024. Let me see. MU $27 in 2020, 28. Yeah, it's been pretty cheap. They just now shot the fuck up the way they did. But I want us to pay attention though. Like, listen, Netflix did some shit like this on me. It was cheap, and then it went up to 100, and I was like, damn, I missed it. But look, it went up past 100. Sometimes 100 ain't as high as it's gonna go.